This is the weekly review for the week of July 11th to July 15th. So, coming into the week, um, I had a bullish bias because I thought that we were going to form a swing low here on Monday, so that Monday wasn't going to violate Friday's low. Um, and because GU had that already, right? GU had that trading range that it formed here with this swing low. So I thought we were going to get a retracement up into some PD arrays in premium of the daily dealing range. Um, so when I saw that price was trading off of the weekly open and Monday open going down, that was in line with my bias. So on Monday, we had two entry opportunities. Now, I was just watching price on Monday because, as I said, I didn't want previous week's low to be violated, but even if it was, that is still in line with the bullish bias. So we had the break in market structure here, and then an institutional order flow entry drill on the M15, which took us down to previous week's low. And then in my journal, I also noted the short-term mentorship setup here. There was no SMT with previous week's low, but just using the logic that this is the end of, or close to the end of New York session here, 10 a.m., also kind of getting into London close, we have a shift in market structure. So as of recently, I've been putting more, or at least monitoring these shifts in market structure. And at least the way that I learned it is the swing high prior to the last low is the break in market structure, where if the last low and we then form a swing high, that's a shift in market structure. So ICT teaches that both of them for the mentorship setup can work, but obviously it just depends on the context. So here we have the break in market structure, right? And price comes up into a premium just of this displacement range. And here we have the setup coming back down into the fair value gap breaker and order block. And price trades up into premium again, taking out buy side liquidity and a fair value gap and also an order block here before trading down lower. So at this point, I'm still thinking that we're going to have a bullish week, and possibly on Tuesday we're going to form the low of the week. And Tuesday is kind of where some of the action starts. Initially we had a bearish setup here during London session with a SMT raid into a order block and fair value gap, break in market structure, return to fair value gap. But now prior to New York, what I was looking at here is how we had this displacement away from the high time frame big figure level of $1 here. So we cleaned out sell side liquidity below Monday low and Asia low, as well as London low, and we had an SMT here, right? Then we had the mentorship setup form, but this was in the interim session. We had the entry at 630, 635, so you can't take this because it's not in a kill zone. So I was just waiting, and then we had this big displacement up, right? So I was looking at this as a institutional order flow entry drill entry, but I ended up taking the comparable setup on GU simply because GU had some very clean equal highs that I wanted to see targeted, just this set of equal highs here and this set of equal highs here. So this was the comparable setup on GU, and I ended up taking a loss here. I did actually put my stop loss kind of tight, but I didn't anticipate this very large retracement that GU had compared to EU. So EU pretty much held the the mean threshold of the displacement range from that low to that high, where GU retraced much lower. And actually, I asked one of the other ICT students who's much better than me, and what he pointed out to me was this, that EU, when we had this displacement, we took out London high and Asia high, right? Where GU only took out London high, but it didn't take out Asia high. And I actually just wasn't even watching Asia high. So we had a SMT with Asia high on GU. GU formed a lower high where EU formed a higher high. So GU, at least in the short term, is relatively weaker than EU, which is why it retraced much lower compared to EU, which did not retrace as much. So that's why this entry here on EU didn't give us a deep retracement and not really a lot of drawdown compared to where your stop would have been placed. And this low here is just the low of the second M15 fair value gap. So this is the first M15, top M15 fair value gap, and then there's another one down here where GU just had one, and it came, all the way down back into this fair value gap and OTE of this price swing here. So I got stopped out on this trade, even though the bias ended up being correct and both pairs of equal high buy side liquidity was taken. But I did note what he told me in my journal, where the weaker pair we should expect to retrace more than the stronger pair. And actually, I noticed the same thing here again, where we had a SMT here, right? EU makes the lower low, and GU makes a higher low here. We don't get a very deep retracement into discount of this range, where now EU has a very big retracement, almost taking out that low. So this was the trade that I got in at because we had the break in market structure here, and we formed a range. Here's the mean threshold of the range, and I got in on this fair value gap here, targeting the buy side liquidity because again I was bullish here. It was in line with my weekly bias, and also we had this breaker here. But yeah, I almost ended up getting stopped out. But then price forms the high of the day here in London close session. So, and then the same thing with GU, come down into discount, much shallower retracement because here it makes the higher high with this 720 high, where EU made, here's the 720 high, a lower high here. So it's weaker, retraces more, but still bullish, at least on the short term, because we just came off of the high time frame big figure level. And yeah, London close forms the high of the day. So Tuesday was a very clean day. And going into Wednesday, which is the CPI news, that's where things for me got a little bit messy, because I was still coming in with a bullish bias, right? And I think looking back, one of the things that I did not wait for was a swing low to form, right? Coming into Wednesday, even though I was bullish after this displacement here on Tuesday away from the $1 big figure level, and we broke market structure here too, is that price didn't form a swing low on the daily yet, right? Here's the Tuesday low. I should have at least waited for Wednesday to form that higher low, swing low on the daily to give at least some confirmation that a low has been put in. But I didn't wait for that. So I think that was one of my mistakes coming into Wednesday, looking for longs, because we did have the mentorship setup form with SMT here, Asia low raid. I marked this out as a Judas swing. We broke market structure, and we took Tuesday high, and that was the external liquidity. And I was anticipating prior to or during CPI, we would retrace into this range from that low to this high, or this high, it didn't really matter. This CPI move was so insanely fast. But basically the premise was I thought we were going to retrace into this internal liquidity here at this fair value gap breaker, also this fair value gap down here, which were both in discount no matter if you use this high or this high. But I immediately got stopped out at this position here, and then in a couple minutes I got stopped out on this position here because I was anticipating London low to form. And my rationale for putting these two orders on here was I just put this order here because, again, I was very confident prior to CPI that London low was going to hold and we're bullish. So I just had this order here just in case we had a deep retracement into discount, even though this entry here was still in discount. But yeah, I ended up getting wiped out almost immediately. And I didn't really realize what the fuck was going on. So I ended up just watching price action for the rest of the day. And we had a SMT with GU, right? So EU took Tuesday low, where GU did not take Tuesday low. But at the same time, we ended up forming a bearish mentorship setup here, rating Tuesday high. There was no SMT here though. Break market structure, fair value gap. Here's your premium. So when I was looking at this live, I was like, all right, this is probably going to be bearish. We're going to target the sell side liquidity here, this low hanging fruit liquidity. I have so many things anchored here to this low. So yeah, I just take that out. There. But yeah, we had formed a SMT here in premium. This is the M15 bearish breaker. So yeah, when I was looking at this live, I was like, all right, we're going to come down here and take sell side liquidity. But we ended up running up and taking the initial CPI high. So I didn't really know what the fuck was going on. And then when I looked back, when I was doing my printout journal entry, I saw that we actually had a bullish mentorship setup form here where we rated previous day's low with SMT. Here's that shift in market structure, right? Because the swing high prior to the low is all the way up here. But this is the shift in market structure. Here's the bullish M5 fair value gap, and it took price higher. Just looking at this, I think this was just a day for manipulation because we took Tuesday high and Tuesday low. So the CPI news pretty much cleared the board of liquidity. But I don't know how you could actually anticipate which one of these moves was going to play out, because the bullish setup failed prior to CPI. Then the bearish setup that was made during CPI failed. And then the bullish setup that formed just after the CPI moved down was a win. So just on this day, I'm not sure how you would be able to discern between all three setups that formed. So that, the reason I'm just thinking that this was just a day to clear the board of liquidity, since we took previous day's high and previous day's low. So coming into Thursday, I was anticipating a large range move on Thursday because of that price action on Wednesday. Now Thursday actually had some very clean price action. So it was safe for me to say that we weren't going to be bullish on the week anymore, because there's been no displacement higher or to the upside, and it was a Thursday already. So I was looking for bearish evidence, and we got that here with the raid of London high here, as well as Asian high. And we formed a setup here. Now, we didn't end up retracing into premium, and that's here initially. So this is the interim session, 620. That's where this entry came in. We had the break in market structure, RTO to the fair value gap, but this is not in a kill zone, nor was it in premium here, right? So I was just kind of expanding this displacement range down. And right here we had our institutional order flow entry drill at this M5 fair value gap. Here's the low-hanging fruit break in market structure, return to the fair value gap, and this fair value gap ended up holding price. The reason I didn't enter on this, I was just monitoring this, was because price never came up into premium, and that's what I was anticipating for, you know. But it ended up being that this institutional order flow entry drill held price to take previous day's low and have a 40 pip rate of it. And I was also watching the same price action on GU on this day. Right, so we had the same entry here, London high raid with EU. Oh, but there were two SMTs, so yeah, GU didn't take London high. But then there was a SMT with DXY here. That's why it's a little confusing, but we had the same setup form. Price didn't return to premium here either. This was the interim session entry, which we can't take. So I was just watching this, and what I didn't actually notice live was that this was also the institutional order flow entry drill here, right? So we broke the low-hanging fruit. We broke market structure here, and this is the institutional order flow entry drill. But I just ended up marking out this large displacement range here from just that high to this low. And because we had this shift in market structure here, or actually this break in market structure here, I took a paper trade long at this fair value gap, anticipating price to retrace into premium, where here on EU we didn't have such a shift in market structure here. There was no close of the candles, right? But we retraced into premium of the displacement range, but it was also this institutional order flow entry drill fair value gap. So I had a short entry here at this fair value gap, but the reason why price didn't need to come up here was because we had this institutional order flow entry drill, right? We already got up into this fair value gap, even though it wasn't during New York kill zone. It was during the interim session. It just so happened that the institutional order flow entry drill overlapped with premium of the displacement range, where on EU it didn't. The premium was all the way up here. And I was just waiting for price to kind of come up into premium, but EU was relatively weaker than GU, which is why it didn't come up there. But after taking previous day low and having a 40 pip, around 40 pip sweep of it, we had a very nice reversal entry here in terms of the logic. The same with GU, where this is the close to the end of New York session, beginning of London close, and we have the shift in market structure here, right? So we're anticipating that this should form the low of the day at the end of New York session, London close, right? We have the shift in market structure here, and price forms the fair value gap. and now we should be anticipating a retracement at least into premium of the daily range to form the close of the daily candle. So just the range from the daily high to the daily low. And we have a fair value gap in here to target also buy side liquidity. So that's why this entry makes sense. We didn't quite get to the 25% mark though, but the logic of this entry definitely does make sense. The same thing that happened on GU. We took previous day's low. We had the shift in market structure, and price returned down to the 25% of the fair value gap, and you would target premium, and we have these fair value gap here as well as buy side liquidity in premium. So this would be the low hanging fruit target. EU obviously ended up retracing even higher. This entry I would definitely not take, because now this long entry is in premium, and we want a long in discount. So that's why this entry here on EU makes sense and is much more high probability, targeting the buy side liquidity in premium, where here you would be longing in premium. And I didn't anticipate such a high retracement on EU there. But as you can also see, the same setup on GU didn't work. We just cut through this fair value gap. Why? Because it's a fair value gap in premium, and you don't want a long in premium, especially because this is a bearish market now. Not only is the high time frame bearish, but just the week is bearish, right? Because we didn't get the displacement to the upside and continuation that I was expecting. So Thursday was another very, very clean day. Now Friday, I was just observing price action on Friday as well. I didn't really have a bias. Typically, the only times that I trade on Friday is if the weekly high or low forms on a Friday, just because I know that I can anticipate a reversal setup happening to form the close of the weekly range, based on Power 3, right? So if we form a high of the week on Friday, there's a high likelihood we're just going to retrace down and form a bearish setup, or a low of the week on Friday, we're going to retrace up to the close of the week, and there's going to be a bullish setup there. But typically, if the high of the week or low of the week doesn't form on a Friday, then I'm not really trading. And that's why I didn't really have a bias for Friday. I was just watching price. We had a mentorship set up here in London. Not up for that, but I was watching prior to a New York session here. I should go to the M15. See, this was the range here that formed prior to the news. So we had news at 8:30, and I was seeing what I was thinking in terms of prior to the news, was this going to be a bullish entry here in this M15 fair value gap just in discount, or were we going to have a break in market structure down and form a bearish setup, right? So we did end up having the break in market structure, whether it be that low or this low, right? But we didn't end up creating a fair value gap. So this ended up being bullish, and I was also monitoring this SMT with previous day's high. Because of this SMT, that's why I was looking for bearish displacement down. We ended up getting that again here. We had another high impact news at 10 a.m. and I was just watching this. We had a setup form here, right? Displacement, fair value gap breaker, and premium, right? But again, I didn't know if this here was going to be bullish. We had a bullish SMT coming down into a fair value gap. So was this actually a break in market structure or just a retracement into discount? And actually this even, this would be discount again, because you would move this up to that high, right? And because I didn't have a bias on the day, that's why I just stayed out of this. And that was obviously very good, because it would have saved me a loss, because even though we had that previous day high SMT, displacement, and everything here for the mentorship setup, this wasn't a sell. This was just a retracement buy, not a break in market structure short. So yeah, that was a good day for me in terms of knowing when not to trade. So in terms of going into next week, I'm honestly just going to be cautious. So this time we do have a swing low that formed here on the daily chart. So we could end up retracing into premium here with these PD arrays, but I'm just going to be cautious on that because high time frame dollar is still extremely bullish. And the comparable chart on dollar would be this daily fair value gap and discount on dollar. But honestly, I'm just going to watch this. Oh, and one of the things that I forgot to mention was that on Friday, the reason also that this setup, this was a buy here, was because of this breaker on the H1. It's very messy here, but this breaker here, H1 break in market structure. So these buys here on that M15 fair value gap with the GU SMT also had confluence with this H1 breaker, which is why price went up higher, even though we had a SMT with GU on previous day's high. So at least in the very short term, price is looking bullish. Break in market structure, RTO to the breaker, and we have a swing low on the daily. We do not have a SMT here though. So this, I think we're definitely going to be taking this daily high liquidity here. And then we also have these equal highs on H1. So honestly, I don't really have a gauge in terms of how high we're going to retrace. Like if we end up forming a setup here or a setup here, a bearish setup that is, I'll probably take it. But this week, I'm honestly just gonna watch and wait for price action. You know, we're still high time frame bearish, but I don't know if we're gonna have enough to retrace all the way up here into premium of these daily PD arrays. So yeah, same thing with GU that I was watching. We have the new raid here of a swing low and buy side up here. So I'm just going to be kind of cautious going into the week in terms of these setups that I take. I'm not just going to automatically say this is going to be bullish and you know, we're going to ride all the way up here. At least we have the daily swing low confluence where we did not have that over here, and that's why I got burned on Wednesday trying to long the CPI news. But yeah, ultimately, in summary, I'm just anticipating some sort of buy-side liquidity to be taken, but I don't know if we're going to come up into premium or not.